Mortgage interest rates. Let's talk about them, right? I think I've never seen some people so focused on mortgage interest rates as they are in this current market post-pandemic. What happens once we come out in 2022? We did see mortgage rates go up basically 300% and some change, you could say safely. Mortgage rates are definitely on the top mind of buyers and sellers. And we even have what's called the great lock-in effect, if you haven't heard about that. It's basically if you did purchase or refinance during the pandemic, you are a part of what's called the great lock-in effect. If you're in your home, want to stay in your home because you don't want to go to a 6 or 7% interest rate, you want to keep the rate that you have. And who wouldn't, right? Of course. That being said, that's considered the great lock-in effect. It's kind of had a freeze on the market. We basically, and if you're a mortgage originator such as myself, during the pandemic, we did like 600 to 700% more volume, as I understand it. We did like 6 or 7 years of mortgages, as I've been told, and it felt that way too, for sure, in a 2-year window. And so then, of course, right after that, what's going to happen? We have the great lock-in effect. Everyone's got these sweet interest rates. New mortgage interest rates are 6, 7%, whatever, and so not a lot of movement there. One thing that can help with this process, though, is we do have a pretty cool product called the 1-0 Buydown. And what that is basically you can get a rate, let's just say, and I'm throwing this out there, today, the 30-year fix is at 6.5%. Well, with this product, for the first year, you can get a rate at 5.5%. You're essentially buying down the rate. You can actually do this several different ways, and we'll talk about that. But you're essentially buying down the rate for 1 year to get, this 5.5% interest rate. And then after that 12-month period, you will then be in a 30-year fixed at said 6.5% interest rate. Now, why would you want to do this? Well, there are a lot of reasons. The first reason is you'll have a lower payment for the first 12 months. And, especially if you're purchasing your first home, hey, that's not a bad idea, right? And the good news is you're then in a market 30-year fix thereafter, with current market, I should say. And so another opportunity then with this product is, of course, if we do see these rates going down, then and there is an opportunity to refinance into something lower, then you can take advantage of that. But you can easily refinance. There's no prepayment penalties or anything like that, out of the 30-year fixed into a lower 30-year fixed or any mortgage should the opportunity arise due to market changes, fluctuations, etc. So pretty cool product. Definitely a big win on the purchase side, I'd say, with lower down payment options and things. Very cool loan. So let's just say if current interest rates right now are 7%, right? And we have a $700,000 mortgage, your 30-year fixed principal and interest payment would be $4,657. Now, let's just say we did do the 1-0 buy down, and now you're at a 6% interest rate, hypothetically speaking. Your payment would then be $4,196. It actually saves you $461 for the first 12 months going with this program. So it's pretty sweet. That's $5,532 that you can save by doing the 1-0 buy down the first year you're in that home. Or if you refinance, let's say you want to cash out, you want a lower payment the first 12 months and then see where rates are next year. It's an awesome idea. Now, how does it work? So there is a reduced rate. The reduced rate is funded actually upfront. So there is a cost to buy down this rate. That's why it's called a buy down. You are buying down the rate. It can be paid for by a seller, a builder, even a realtor, or even the lender can cover the cost of this, as well as the buyer. So anyone can cover the cost of the buy down. And really, I'd say if you have questions about it, it's best to get an application going, and then we could kind of really detail in scenarios, because it's kind of an open-ended spectrum of things that we could do with different loan amounts and costs and things like that. It's kind of all over the place. So to really understand what we can do on this, it makes sense to fill out the application and get fully pre-approved in order to really explore options that make sense for you, and accurate options, I should say. So the reduced rate is funded upfront at closing, often through the seller or builder concessions, like I mentioned, and you don't have to pay for it out of pocket for the savings. Year one, you enjoy payments based on the rate 1% lower than your locked-in rate. And year two and beyond, you're in a fixed rate, 30-year fixed rate, conventional mortgage, and you're ready to go. Now, who can benefit from a 1-0 buy down? Well, obviously, first-time home buyers have a great advantage because if it is possible for the seller to do some concessions, then these buyers can get into a home with payments that are substantially lower, right? $461 a month in that last example. Then enjoy the benefits of a secure 30-year fixed for the term beyond that until they either move, refinance, or whatever the case may be, pay off the loan. People looking to refinance, like I mentioned, do a cash out refinance. This could be a pretty solid option for you to get immediate flexibility in lower payments, get your cash out, and then see what happens in the coming months. Sellers and builders. Now, how would a seller or a builder benefit from this? Well, it's a nice opportunity. It's a nice shiny object, right? Hey, we're going to pay for a buy down. So your interest rate is going to be 1% lower than market the first 12 months you're in the home that we're selling you. So that's a pretty good incentive, especially in a tight market. If the home is sitting a little bit longer than it should, this is a great incentive that beats lowering the price, doing a price reduction. You can do a seller concession for doing a 1-0 buy down, and it's a really solid option. So if you want more information on how the 1-0 buy down works, you can go ahead and direct message me. You can reach out to me at freshhomeloan.com. We'll have a link in this, wherever you're watching this. There'll be a link you can click on. I'm here to help you out. A lot of great options out there for this. We even have other buy downs as well, like the 3-2-1 buy down, the 2-1 buy down. So do reach out. I'm here to help you out. I'm Eric Wordmuller, independent mortgage broker, Fresh Home Loan, independent mortgage brokers that work for the people.